Happy Cinco de Mayo! Everyone, Star TV here with Mason McDuffie Mortgage. Happy Cinco de Mayo. I hope that you guys are doing well, you're safe and healthy. Wanted to reach back out to you guys with a quick little update as far as what's been going on in the housing market and also the mortgage markets. First off, the Fed came out last week and they announced that they're going to keep the Fed funds rates near zero through potentially the end of next year, 2021. This is great news for anybody who holds a home equity line of credit, which is directly tied to the prime rate. This means that they'll stay low at least through the end of next year. Now, speaking of home equity lines of credits, or HELOCs as they are known, second mortgages on your home, we have had some movement on that front, and not all of it in a good way. We actually had an investor come out today that said that they are currently completely pulling out of doing home equity lines of credit at this time, and will revisit when they're going to come back to the market as this COVID-19 virus continues and what the effects are going to be on the economy and on homeowners. On the same note, we did have another investor come out, not completely pulling out. They are not going to be doing any refinance transactions for home equity lines of credit, and they're only going to be specifically looking at doing loans for home purchase transactions, which is good for a lot of our buyers who are out there looking at doing 80-10-10 types of loans or 80-15-5 types of loans that are out there. So good news, at least on that front, that we at this point still have access to that program. On the housing front, there's a lot of optimism there. A Zillow study recently showed that there might be only a 2 to 3% drop in home prices in 2020, with a worst case scenario of 3 to 4% going into 2021. If you look at housing prior to the pandemic, the housing market was booming. Prices were increasing while inventory were at the lowest levels that we had seen in 40 years. Inventory should remain tight as new construction has slowed due to COVID-19, and demand for home ownership has been pent up as those living in apartments are looking for more space and more distance. And remember, the biggest driver of buying a home is having children. And a lot of people are expecting that there's going to be a lot more childbirths in about a year. There are some people who are questioning why we might not see home prices drop more, and why it might not be back of what happened back in 2008. So let's take a look at some numbers. As we're entering the Great Recession back in 2007, the number of active mortgages was about 53.7 million. In February of 2020 this year, there was about 52.9 million. The share of home ownership with less than 10% equity back then was about 14.5%. Today, it's about 6.6%. The other numbers to kind of keep in mind with credit scores. Back then, the average credit score was about 713, while today it's 747. Some other big numbers: subprime loans, which were one of the reasons that we went into the Great Recession and had the mortgage meltdown, were at about 5.1 million back in 2007, 2008. And today we're at about 1.98 million, so quite a bit less. And the number of active ARM loans, adjustable rate mortgages, back in 2007, we were just under 13 million, and today we're just a little over 3 million. And the number of active option ARM loans, these were the pick-a-pay loans, back in 2007 we were looking at about 2.23 million, and today only about 384. As you can see, some of these numbers are drastically different, and the mortgages that are being taken out recently since the Great Recession have a higher level of guidelines that go into it. They're harder to get. We don't have all the option ARM loans. We don't have the balloon payment loans. So a lot of these homeowners today are in a much better position than they were back in 2007. Another topic that keeps coming up is forbearance, and is it the right thing to do or not? Forbearance should be the last resort for any homeowner right now. There are a lot of consequences of somebody going into forbearance. As of April 26, there are 7.54% of homeowners who have entered into forbearance. And those people may not be able to reap the benefits of lower interest rates once they come out of forbearance. As of right now, current Fannie Mae and Freddie Mac guidelines state that if you are in forbearance, you first have to come out of forbearance and then make 12 consecutive payments on your mortgage before you can get a loan from them. There has been talk that this forbearance doesn't affect your credit, which may be true. You may not see a hit to your credit score, you may not see late payments on your credit, but because you did go into forbearance, there are guidelines on that. And again, if you go into it, not only do you have to come out of the forbearance, meaning that you have to make that lump sum payment when you come out, or if you did it over several months, whether it's 3, 6, or 12 months, you have to come out of that forbearance, and then make another 12 months of payments. So somebody coming out of forbearance, let's say in a year from now, may not be able to refinance and take advantage of the low rates that we currently have and are expecting to continue to have until potentially 2 years later, which it might be too late by that point. As we close out this week's update, I did want to reach out and also let you know that a client and friend of mine has a business that is selling masks, gloves, and wipes through his company. What he has done for me is he has given us a special code where you could get a 10% discount on any of those items. All you have to do is go to vitalsupply.store.com and enter the code SARTIPI-team for your 10% discount. This information is also in the body of the email, but wanted to share that with you as I thought it was a great thing that he was doing out there and allowing our clients to take advantage of as well. And lastly, just want to say to all the mothers out there, happy Mother's Day. I hope your kids, your spouses spoil you on this special day of yours. Thanks so much, everyone. Stay safe. We'll talk to you soon. Bye-bye.